All right, guys, time for another trade recap here. We're going to head over the SPY and we're going to go over the Qs. We're going to see what happened on today's daily prior body here. So yesterday, or this morning, I should say, I posted this on the old Twitter. So we are looking for either a target of yesterday's highs or a break of the gap and target of yesterday's lows. But most importantly, in our post, we said the directional will be off the center of the body of yesterday's candle. And that's what we had posted on Twitter for the pre-market, looking for directional plays. So let's get into exactly how that played out. So we have an orange channel right here on the SPY, and using the intraday indicators and what we have right here for fibs, we'll show you exactly what you can trade, even if the trade did not get to the exact target on each side. So we wanted to get to yesterday's highs and we wanted to get to yesterday's lows. Both shied. And when something shies in price action, that usually generates a massive amount of demand and support. So just to take a peek on here, yesterday's trade day right here left a gap. And this is yesterday's highs 3 days ago. So not yesterday, the day prior. This is yesterday's highs and this is where the lows were. So there's this gap right here, sliver gap on the daily chart that I had posted, and these gaps love magnets unless they're in a force up scam. Now remember that, because as we go into today's over under body price action, there are many trades to take here, especially on the 1 minute chart. When they manipulate, they slow down the price action and you can only use the 1 minute chart. So made it actually relatively easy to view today, but it was just very slow. So let's take off some of the best entries and exits here and plays that you coulda, woulda, shoulda took today. So my call was obviously direction of the body. Look where we opened up. Dead center consolidation right in the body, right? So we had this really ugly chop consolidation, and we're looking for either price action to confirm and hold above or confirm and hold below, which I said I was leaning short early in the post. So I'm leaned short, leaned to that 44.2 20s lows, which is going to be right here and lower. So now with this breakdown here, we had a couple different targets in the last YouTube video. 666 5-minute would have been nice. The Qs got the 666 5-minute target. SPY shied it. Now again, remember the scam, right? Yesterday left a silver gap. Today left the exact same gap, only a little higher. That was your indication that the market was heading up 100% when it cannot close a sliver gap and an algo gap. They hate when they do not fill that. So no fill here, no fill here. That is upside biased because of no fill, and it shied away from a price action it should have hit very easily and very reasonably. So this gap is still open now, 2 days worth. Now, when you see that gap get shied and never tag, you instantly have to reverse. So let's look at all the technicals here that we have on the 1 minute and the 5 that would lead you to believe that this was going to reverse. First off, we had beautiful shorts today, making over $2,900 on the funded, 800 on the live account, so on and so forth. So we had a really easy green day, but a lot of scalps, right? So the first scalp was obviously over under the body. Do you see it above the body? No, we obviously take it down. It broke into a lower low into yesterday's close here, came up, retested the center body, down, lower low, came up, tested again, the pre-market open, 5-minute 200, and straight down. And again, we missed that gap by just a tiny bit. Came into the deviation -2, okay? And that's on the VWAP. So the leg down to the VWAP -2. And this is where all the magic happens. Go to the 1 minute chart real quick. Look at how easy these crosses were to identify. Not only do we have that inverted head and shoulder on the 5 minute as a pattern, we had a big shy off the 2. So what had happened right here, picked back up, no fill again, scam. And you got to wait for it to come back down and give you the confirmations, right? So it ran all the way to, again, shied the VWAP. Shying pinnacle points are a very, very big sign that it's going to come back for those points of interest. So 2 different shies here on the purple center regular VWAP, but all it did was make a low and a higher low. Let's look at our oscillation indicators here. All higher lows on the RSI right here, crossing on the 3rd higher low right here. So we have 3 different higher lows on the MAC, paired with 2 higher highs. So MAC is telling us that trend is going up. We're just waiting for the market to find that higher low to find convergence and head back up to most likely the body, right? So we never got that fill. It shied it, which means it's extremely scared to fill that gap. It is getting manipulated and bought up ahead of that gap, which means it is extremely strong. Okay, so we leaned short for the morning. We were 100% right. Got all of our big greens right here. And we're always out before target. Took a lot of different scalps there. in that morning chop as well. It worked out okay. So let's move into the metric right here where the consolidation was. This consolidation through the afternoon was dead slow. Couldn't get out of yesterday's body. So this is the daily chart body, okay? Right here. This is the body of yesterday's daily candle. We're going to move back to that 5-minute chart now. We're going to look at this consolidation. And what does that show us? Well, on the oscillation indicators, we're on the top of the RSI, okay? We are consolidating from the 50 point to the 70 point. This is the top channel of the RSI. This would obviously make this the bottom under the 50. That's how we use those oscillation indicators. We have indicators that we use, studies here on the YouTube channel. You can check those out in the playlist below if you want. Now, once that happened to cross again during consolidation, let's look at our next oscillation indicator, the MACD. The MACD also came over the zero line, consolidated, and gave you nothing but higher lows and higher highs on the wave on the 5-minute. So all intraday indicators were pointing to a further breakout scam to our target A. Okay, so target A was yesterday's highs, target B, yesterday's lows. And all you had to do was use the center of the body with confirmation intraday indicators. That's it. So earlier we had the big pre-market push and we chopped into the lower RSI and crossed. We had all this max selling and we had some lower lows all the way down to the MAC before it based at the algo reversal times, 10:30 a.m. Central. That's Euro close. So the algos let go of that short, got scam popped up, consolidated for a solid couple hours here through the afternoon, and then was in the top channel like we just went over. Both oscillation indicators. So it crossed right here and went. So let's look at the other bear case for VIX. We had a VIX gap that needed to be filled. And this is why we were saying long on the market, because the VIX gap on the daily was filled right here. Now, I said this could easily further melt down because we're into the Q1, we're into the fake PE, fake ESG score, market is fake. There's no such thing as any of this money in here. So when this VIX kind of comes back down and the, FOMO all-time high momentum continues, it's very easy for that to continue. So we still have a bunch of markers and much of targets upwards here of, 489.44 on the 2618 fibs on Fibonacci, and so on and so forth. So let's take a look at not yesterday's after hours, but the after hours before. We did this in our YouTube video, and we took this algorithm candle after hours, big giant one right here. And what did that do? That provided us with a Fibonacci tool to use for support resistance matched with our oscillation indicators, right? So let's look at the real easy one right here. It goes to the 1618 and usually pulls back. So here's the 100 fib, price action up, 161, no tag. That is a shy. It did not click into the 1618. Price action shied, fell all the way back down. Chop, 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 nothing. Okay. Next day. And generally speaking, if it does not come back down to the 100 fib, aka very close to the gap fill that we had just covered, we're going to get squeezed back up and it will magnet back to the 1618 from this algo. Okay. And that algo needs to find a resolution. It needs to hit that 161. And the funny part is it didn't even hit it on live hours. You notice we missed it yet again. So when this comes back down, I don't see, besides Netflix chopping around here after earnings and blowing up, we have a Fed black up here. We have no other catalyst till Thursday, Friday that are really going to slam this market. So initially we were looking for the SPY to have a consolidation day, but we wanted it to close red. It actually closed green, just big old FOMO. That's fine because we used yesterday's body as directional. We didn't really, the bias changes above or below the body. So nothing else matters than your own bias on that prior candle. So we fib out the algo. This is the algo fib here. Box, and if it never touches that 100 fib and gets bought up and leaves that gap open, it is going to squeeze late day because it got scammed. It's a scam no fill. The market's algorithms did not allow any of these gaps to fill, and they started pressing upward. Once you've seen that final squeeze right here, shy the higher low up, highlighter right here. So this is the higher low from the low. That was giving you all that direction with the MAC and the RSI and the sentiment changing. So it came back up, consolidated, more short fuel, so short trap, right? And if you're not paying attention to the oscillation indicators in the top channel, like I said, top channel, everything is bullish right here. And then we shied the gap and we shied some other mega levels that we were going to pop up to, like we talked about the purple VWAP. We slammed through the purple VWAP here, shy 1, shy 2. And then as it came back down, we consolidated in the body and then made that move because of course, top channels. And then of course, above the purple VWAP. So it's squeezed up right here, blew right through, came back down, tested purple dash VWAP, up, higher high, tested higher low purple VWAP for the late day power squeeze. And that's what you're looking for the target. Now, again, this still leads us to to wonder where the live tag is of 485.24. So that's what's main focus is going to be tomorrow. If this starts squeezing up in another gap and go craziness or whatever, fine. We're going to have to look for a back test of it before anything. And then if it FOMO's out and just continues the FOMO MOMO of idiocracy, the people that buy highs and the shorts that try to pick tops that love to pop this market up, well, we're just going to go higher from the potential prior fibs. That's it. So we have big breakout candles, so short-term fibs that we can relate to. So I'm still on the short side of things. I don't know how much higher we're really going to go. I know Netflix earnings, is a pop right now into 532, keeps going high. Again, we'll wait till the call and we'll see how that ends up playing out. I don't care about it until the morning. So if we gap and go again, doesn't matter. We just have another target of just under 490. If we gap and go again, we have continuation 496 and standard deviation +1 on the daily. So we're super far away from that yet. So we can easily magnet to there. And we are in a FOMO melt up. So the last time this happened off of our daily chart here, let's go back here. Just look at deviation. Standard deviation tells you that on the daily chart, we can stay erratic and mental all the way up into this deviation for quite some time. There's a 60-day period almost right here where the SPY never pulled back into the +1 deviation. It just had no interest in it, right? Manipulation up and push, push, push. It doesn't matter which one it is on Qs or if it's just a blast from, the short power. So when this comes up, this has an opportunity to easily go 494.21 on deviation. And as we scalp our day trades over and over and over, like we would in today, we are still going to make that money on extreme lows and highs. We're going to get out ahead of time. So shorting that break of the body's 50 all the way down and getting out before the gap fill, and then longing this one here, and of course getting out before yesterday's highs. Those are always shies, right? And so the directional pick that we chose was over under the center of the body. So if you see price action with your indicators, as we just explained here many times, higher lowing on trend above the 100 EMA consolidation, inside the body consolidation, moves up above the purple VWAP and continues that push. That's all I really needed. And a lot of the times we see pre-market high and low get tagged a lot of the time. So that's another incantation here. This is high, this is low. So I was leaning short, like I said on Twitter for the first part. Boom, pre-market lows, boom, consolidation, and pre-market highs. So if you literally waited for the oscillation indicators to tell you long bullish consolidation and short bearish consolidation, you would have had two monster trades from the exact directional pick that we had talked about, which is yesterday's body. So I hope that helps out. We're going to watch where these Fibonacci's come in tomorrow, and we're going to pay attention to 485.24. Now, again, this is earnings. We're going to have to see how far this wants to push up. And if it comes up like here, just jams up, there's a chance that we'll fill backwards to 1618 first from the algo. And if not, we're just going to see FOMO gap up maybe. We'll see what Netflix call. Last time Netflix was up here into the deviation +1 and had earnings, it shit the bed. But right now we are in a very fake, layoff, fake ESG, fake, money market, especially the hype on AI and, everything else following, that we are going to keep getting those pressures up. We're going to keep getting upgrades on Apple, AMD, NVIDIA, and those random just upgrades that just keep pumping as they lay off workers. It's just a sham. So we got to play the sham correctly, though. The market is a sham every single day. You just need to be aware of it and how to play it. So these magnets worked out pretty well, and tune in for the next, and we'll have some live predictions on Twitter for tomorrow morning. Take care.